This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Global oil inventories are expected to fall by 200,000 barrels of oil per day in the second half of 2023 due to voluntary output cuts from Saudi Arabia and reduced production among OPEC Plus countries, the U.S. Energy Information Administration said on Wednesday. The lower inventories, which are forecast to keep global oil supply below consumption, are likely to boost oil prices, the AS said in a monthly report. It now sees spot Brent crude at $94.91 a barrel in 2024, up from a previous forecast of $88.22. Oil prices have been volatile in recent months, with voluntary outputs cuts from Saudi Arabia and Russia lending support while macroeconomic concerns have thrown into question demand expectations and put a lid on futures.
Russian President Vladimir Putin said on Wednesday that OPEC Plus coordination would continue in order to ensure predictability on the oil market and signaled strongly that a deal to constrain supply to world markets was here to stay. OPEC Plus pumps around 40% of the world's crude. It currently has an agreement to limit supplies until the end of 2024. I am sure that the coordination of the OPEC Plus partners' actions will continue, Putin told the Russian Energy Week conference in Moscow beside Iraqi Prime Minister Mohammad Shia al-Sudani. Iraq is the world's third-largest oil exporter.
Moving on to the top news in the energy sector.
Global energy consumption will likely increase through 2050 and outpace advances in energy efficiency, the U.S. Energy Information Administration, EIA, said on Wednesday. Global population growth, increased regional manufacturing and higher living standards will contribute to the increase in consumption, the EIA said. Global carbon dioxide emissions from energy will increase by 2050 in most scenarios outlined by the EIA. Non-fossil fuel-based resources, including nuclear and renewable energy, will produce more energy through 2050, but that growth will likely not be sufficient to reduce global energy-related CO2 emissions under current laws and regulations, the EIA said.
NATO will discuss damage to a gas pipeline and data cable running between member states Finland and Estonia, and will mount a determined response if a deliberate attack is proven, NATO Secretary-General Jens Stoltenberg said on Wednesday. Damage to the Baltic Connector pipeline and telecommunications cable was confirmed on Tuesday after one of the two pipeline operators, Finland's Gasgrid, noted a drop in pressure and possible leak on Sunday night during a storm. Helsinki, which is investigating, has said the damage was probably caused by outside activity. That has stoked concern over regional energy security and pushed gas prices higher.
Next, we have the top news in metal markets.
A flurry of copper mining deals are being lined up for the next 6 to 12 months, industry sources said, as producers seek to spread the soaring cost of new projects for the metal key to the energy transition. The capital needed to develop new mines has shot up some 50% to between $3 billion to $4 billion on average in recent years, fueled by declining ore grades, stricter environmental requirements and rising labor costs. Copper producers increasingly want to share the risk and costs of projects, and the sector has already seen a jump in M&A activity, which more than doubled year-on-year to $14.24 billion in 2022.
India set royalty rates on Wednesday for the mining of 3 critical minerals, including lithium, that are key to its clean energy ambitions. The royalty rates for lithium extraction by mining companies will be fixed at 3% of prices prevailing on the London Metal Exchange, LME, the government said in a statement. India has been exploring ways to secure supplies of lithium, a critical raw material used to make electric vehicle batteries, and found its first lithium deposits in February in the federally controlled region of Jammu and Kashmir. We will now look at the top news in the agricultural sector. India's government is set to restrict sugar exports after poor monsoon rains, broadcaster ET now reported on Wednesday, citing agencies. The seasonal monsoon rainfall is vital for India's $3 trillion economy and brings nearly 70% of the rain the country needs to water crops and replenish reservoirs and aquifers. Monsoon rain this year was the lowest since 2018 due to the El Niño weather pattern, a warming of Pacific waters that is typically accompanied by drier conditions over the Indian subcontinent, according to the state-run Weather Office.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.